Hello, welcome to another edition of Nucleus Investment Insights. So I wanted to dig in. There's been a bunch of different announcements in recent weeks about driverless cars, and I know we've sort of talked a few times about the economics of it, and this is sort of one of our bigger trends that we're sort of quite keen to watch because the rollout of this and when it gets started, when it doesn't get started, has a huge implications for a whole bunch of different sectors, not just the driverless car sector itself, but a whole range of different sectors around that. So I just want to sort of run through some of the latest information and just sort of talk about the economics again and where we're sort of sitting in terms of the in terms of where cars are. Quick reminder, everything you hear today is general in nature. It's not personal financial advice. If you do want personal financial advice, feel free to jump on our website and book yourself in. So yes, so without sort of any sort of further ado on that, I thought I'd jump straight in and start discussing what some of the issues are. So what we've seen is Tesla's launched its full self-driving, it's driverless car. And when I say launched, it's inverted commas, and I think there's a certain sense that Musk has got a relatively well-beaten path of in electric cars, in driverless cars, of making announcements that don't come through. I think maybe 2015, he sort of spoke about it being 2 years away, and here we are 10 years later, just getting sort of started in inverted commas in the sense that, there's still drivers, still people sitting in the front seat. Effectively, I guess what I'd talk about it is that Tesla very much seems to be where Waymo or Google was 6 or 7 years ago. So having said that, the amount of technology, the way technology has moved on, improvements in AI, a whole bunch of things probably means it's not going to take them the same length of time. It's just a question of whether they can catch up. So anyway, so that's out. We also had earlier this year, Google or Waymo was one of the operates under, the brand it operates under, announcing it was doing 250,000 trips per week now across all the different cities it's on. So sort of thought that's probably the real one I sort of wanted to talk about. I want to talk about some of the naysayers, what they're saying, talk a little bit about sort of the whole where electric vehicles sit in there and what that means for electric vehicles as well. Talk about the economics of it and the disruptive capabilities of it, and sort of put together a few thoughts in terms of timeframes and really what we should be watching from an investment perspective in this area. So just as a quick aside, I just want to jump back quickly to driverless to electric vehicles and just talk about some of the issues around that, because all these ones we are seeing come out are all electric vehicles at the moment. I've got a chart up just showing, this is my sort of take based on the latest data available of the payback for an electric vehicle battery. So for the average US consumer, now this changes by country, it changes by based on driving patterns and the cost of petrol and the cost of electricity and all these types of things like that. But in a broad sense, what I'm showing here is on the bottom axis is the oil price, and on the left axis is how many years it takes to pay back. And then each of those lines sort of depends on how much range you want. So if you are happy to have 100 kilometers of range, so let's say you're a commercial vehicle of some sort, like a postal van or something like that, and you're driving 50, 60 kilometers a day, and so 100 kilometers of range is no problems at all. Or you're driving, say you're a bus and you're driving routes and then stopping, and you can charge it up a little bit, and then you go on your next route or things like that. Is that it's on the average sort of length of time that the average distance that the US consumer will travel in a year, it's pretty economic with 100K batteries, because it's just not very expensive. So you're $50 oil, it might take you 2 years to get your money back on it. But if you've got the range anxiety and you need like an 800 kilometer or 500 mile range, then you're talking about whatever 12, 15 years or something like that. There's you're not buying it on an economic argument, but there's a pretty reasonable argument that people don't generally buy cars on economic arguments anyway. Like there's if we did, then everyone would be buying the small sort of $20,000, $30,000 cars and using those as opposed to shelling out hundreds of thousands of dollars for luxury cars and the like. But anyway, just on a pure sense, that's how it looks. But the issue is that if you're running this sort of driverless car model, then this drops away quite dramatically. So you're probably going to be doing 50,000 kilometers a year, about 30 odd thousand miles, 50,000 kilometers a year. And all of a sudden, these rates drop quite dramatically. And you probably don't need the same batteries as well insofar as your car isn't driving that far, running particularly within cities, doing a lot of these routes. And your payback is then going to be dramatically improved. So, if you're happy with 100 kilometer payback, then 100 kilometers of range, then it's less than a year in terms of payback. Even if you're looking at 200 or 300 kilometers, which is, I guess, what the assumptions would say these cars are driving per day, or probably less than that. For a lot of them is your payback sort of a yearish, and so the economics sort of stack up in terms of a electric vehicle significantly better. And then I'll talk a little bit more through that in a minute. The other stats I want to just run through. So the other big picture then is I wanted to go through before I get to that one. I guess what some of the naysayers are talking about, some of the biggest problems that you have. I think the biggest one you get from is using sort of past cost as a sort of sunk cost fallacy. I guess I'd put it as one is using Uber as an example and talking about how many times Uber's broken its promises. Sorry, Uber. Uber's the wrong one. For Tesla, sorry. Is what I've written Uber there, but using Tesla as an example of saying, look, they've made these promises so many times, they've broken the promises so many times about when it's going to get out. Therefore, you can never trust them to release these at all. Is sort of like is one argument. I think there's you could also use the same argument for some like we had Cruise or GM. They sunk a lot of money into this and then had a pedestrian death and have basically ceased that project after putting all that money into it. Uber did shut down, I suppose, and they started something and shut it down. So you got and there's talks about there's well over $100 billion, possibly closing in on $200 billion has been spent on this. And there's nothing to show for it, is one sort of argument. So I think if you were looking at if Tesla was your prime example for the number one car in this market, and you hope for where driverless technology was going to take off, then I think you've got a more reasonable argument. You're sort of talking about, as I said, I feel like Tesla is now where Waymo was in 2017. So you can make that argument, I think. If you look through say the Waymo, though, that's where I think a lot of that starts to fall apart. So you need to sort of come up with an argument. To me, you need to come up with an argument that explains why Waymo's, which is sort of running, as I said, 250,000 trips a week at the moment, probably more than that. That was earlier on this year, they're running 250,000 trips a week. You've got to come up with a reason why they're not going to, why they're like a mirage. So, and even if you sort of went on this, they've spent all this money and it took them way longer than they expected, and therefore future investments doesn't work. It's like, well, no, that's something you can that's the sunk cost. It's already spent. The question is, where can you go to from now, and can they actually make money on the projects they've got? And you can certainly make the case for a whole range of things, whether it's internet or railroads or all these things like that spend way too much money at certain parts of the cycle, but were still successful products in the end. There's one of the FT Alphaville writers sort of back sort of 10 years ago and still pops up every now and again, wrote a long things talking about saying, well, driverless cars isn't going to work because the driver is not just driving. The driver is also a cleaner of the car, a caretaker. If you're what you're giving up is your security guard for the car. What you're giving up is that by not having a driver there, then all of a sudden you're gonna have to clean the car all this time. You're gonna have to you're gonna have all these broken windows. You're gonna have all these problems with other factors that go into it. Now, look, I find that one really hard to swallow. I think you could make, these cars have cameras all over them. There is people are hiring them on their credit card, so it's a little bit different between and so if you're talking about somebody drunk and throwing up in the car, is like, well, there's a cleaning cost associated, and taxis have it, and the problem with a lot of taxis is that people would do a runner on it. You didn't know, you picked up a random person on the street and you wanted to get them to pay you, but now they're thrown up in your taxi and they're off. That's not happening in an Uber, or it gets to happen once per customer. So you've thrown up in your Waymo, and you've done a runner and you haven't paid, or you tried not to pay, or somehow you've cancelled your credit card or whatever it is. Well, you're not ordering another one again. So I feel like there's a certain amount of I feel like that argument is sort of lost in that whole. We live in this world of whether it's eBays or Airbnbs and things like that, is ratings of customers, and if they're not doing what they're if customers are misbehaving, then they don't get to use the service. So I sort of feel like that's that argument sort of goes out. There's another argument that, look, cars are actually part storage locker, so people aren't going to switch to using widespread aren't going to switch to using driverless cars. They're going to, because people want to own stuff, because you can leave all your gym gear in your car, or you can leave your surfboard or whatever it is. It's and so there's a certain utility element to it, and maybe that's true for some people. I think there's there's a cost benefit analysis. I think when you if people are looking at it saying, okay, it's the same cost for a car to own a car versus just take driverless cars for most of your trips, then maybe that pops up. The second part though is there's if you're running at half the cost or less than half the cost, then all of a sudden those arguments are, well, okay, it's now a trade-off. How much am I if the average car cost is sort of $10,000 a year when you take into account depreciation and all the sort of traveling costs, how much am I, or I can go with driverless cars and spend $4,000 a year. Am I prepared to pay $6,000 a year for the luxury of being able to leave my gym bag in the car and things like that? So for me, I'm like, yeah, that doesn't seem to be a clinching argument to me. There's this whole thought, if we're going on holidays and doing all these other things, it's like, yeah, fine. So you probably you might rent one permanently for that time period, or you might, lots of different things for that. I think there's those arguments I'm not convinced by. Malcolm Gladwell's got this whole thing about, look, once driverless cars are around, then people are just going to step in front of cars because they'll know the cars will stop, and so the streets will be mayhem, and nobody will be able to drive anywhere, and all this stuff like that. Again, that sounds like a stereo to me. These things have cameras all over them. Pedestrians already have rules against jaywalking and all these other factors. Maybe I know they don't get enforced, but if you've got 20 different cars that have all got video of you stepping out in front of them and halting traffic, and having people coming screeching to a halt, and people getting injured in cars, and but because you're acting recklessly, I suspect you're going to find that people will get fined for jaywalking or for dangerous type things. So I find a lot of those arguments don't stack up in the longer sense of it. So let's talk a little bit more about Waymo, because I think there's that's really where I think we need to target in terms of working out, is this going ahead? So at the moment they're in 5 different cities. The main cities they're in at the moment, and there's certainly limitations on what they're doing and where they're going and all that stuff like that. So I don't want to overplay this as being they're already for prime time, but I do want to sort of talk about their time to roll out. So Phoenix was sort of like the major first one, and I've sort of got 2 charts here, and these are just my guesses at based on announcements and things like that. Is there's a month? So how many months did it take them to go from sort of testing and beta to like, okay, now we've only got the rider in the car? So we might have been running beta tests with either employees or with consumers, but having a driver sitting in the car, whether they had their hands on the steering wheel or whatever it is. But having that one there, how long did that take? And then how many months did it take them then from once they went to a beta test with a select amount of drivers. How long did it take them to go from that to actually live and open to anyone? So Phoenix was like 5 years all up. So about half of that with just that with safety drivers in there and that sort of really just in a beta stage without that sort of smaller group. San Francisco, about half that. LA slightly more actually, and sorry, this is in order of how long it took them. And sorry, where it was released. So LA took a little bit longer, but a lot of that was regulatory based. I think there's a reasonable argument that LA probably would have been faster, but it was a regulatory issues that sort of held them up in there. And then once, but the other thing noting is that the number of months to go live sort of dropped. Once they'd sort of gone to that beta testing, dropped quite significantly. And in the latest two, Austin and Atlanta, once they'd sort of gone to that beta testing, it was only a month or less than a month before they actually went live on that. So you're looking sort of two-ish years for San Francisco, LA from sort of start to getting going. Austin, 18 months. Atlanta, less than a year. And now we're looking at a number of different other markets that are, they've announced that they'll be sort of launching in. So Washington, 2026, is in Washington DC, but that's regulatory based. So the delays there are probably more going to be regulation than the testing side. Miami's in trials right now, so that's probably pretty soon. I think in the next sort of 6 months or so, you'd expect that'll be up and running. New York City's they've started, but that's again regulatory issues around that. And then the preliminary testing, they're in Boston, Nashville. Oh, sorry, they're also in Tokyo as well. Sorry, they're talking about Tokyo launch at some point soon. They're in testing phase in Tokyo. And then, they've got 2, 4, 6, 8, 10 more cities that are in the preliminary testing: Boston, Nashville, New Orleans, Dallas, Las Vegas, Philadelphia, San Diego, Orlando, Houston, San Antonio. So it's all the major all the big sunny population centers in the US. There's a couple there that get a fair bit of snow. So New York City, Boston, I guess are the two primary ones where, and maybe Washington to a little bit as well, is that, they're just extent about some of the issues about driving in snow and other factors. So anyway, so launches have happened. They're getting faster. There's a lot of cities on this scale. If you're sort of assuming that the processes are sort of halving as you're doing more and more cities, there's a reasonable path to suggest that the rollout could be really fast from here. In terms of the number of drives you're doing, so market share that they're looking at in something like San Francisco, where it's quite high, I think is around about 40% of ride shares. So significant in terms of ride shares. Ride shares are a pretty small percentage of the overall market, though. So I think there's this sort of two edges to this, or two sides to this. One is how fast can they get to the stage of taking over rides from other driverless operators, which is obviously a bit easier. And there are safety concerns that people have, and all these other issues that will need to be worked through. But I think the feedback you tend to get within these is that their safety issues tend to be a fair bit better than other cars. So they're sort of like 80-something% fewer airbag deployment, injury causing crashes, and 60-something% fewer police reported crashes under Waymo. So in terms of driver safety, I think there will be a period where people will be concerned about it. But I think there's in the past I've used the example of Ubers and Lyfts and things like that anyway, is that the first part of that was when they came out, was everyone was like, why would you get in a car with a complete stranger? Taxis were very big on the whole fear factor is, I know our taxi drivers are, where they've been verified and vetted and all this type of stuff like that. But pretty soon people worked out, actually, I do know who's driving the car, because they're the ones I'm giving the 5 stars to, or the 1 star to, or whatever. And actually maybe it's even better. I've got a much better feel on who the driver, because when I get in a taxi, I'm actually getting into a random car with a stranger more so than an Uber, and so so I think there's a certain that fear of unknown need to become overcome, and there's certainly a lot of people, I think, particularly on the survey data they've got, is that there's certainly a lot of women who feel more comfortable without a driver at all. Just from a safety perspective, I guess weighing up the concerns and fears there, is that it might well be that's sort of a driving factor as well, if you will pardon the pun, of people coming to terms with what the coming to terms with getting comfortable with driving this. So in terms of other players, so it is worth, I guess, noting there's really not a lot of other players out there besides Google that are sort of at this stage. Cruise was looking. Cruise had some operations running in San Francisco 2 years ago that were pretty similar to Google's at the stage, or seemed pretty similar. But the feedback I think we had from most of the car surveys and people who were testing them was that Google felt like a sort of a sort of beginning driver, in terms of it was relatively smooth. Every now and again to do something a little bit jumpy or a little bit weird, but it was largely it was very cautious sort of beginning driver, whereas the Cruise felt like a new learner. There's a lot more jump starting and not as smooth, and a lot of other issues with that. Cruise has largely folded, has folded. You have Amazon has got its ones it's starting in testing as well. So they're hard to tell with Amazon. It's in a very small area in Las Vegas. My guess would be they're sort of 4 or 5 years at least behind Waymo. They're probably where Waymo was in 2020-ish, whereas I feel like Tesla is probably where Waymo was in 2017, 2018. So not to say they won't catch up, and they're certainly throwing a lot of resources at this, but I feel like there's sort of also runs at the moment. There's a lot of Chinese car companies testing in this area as well. So I guess we'll see where that sort of ends up in terms of those players. What else did I want to talk about in terms of these? Before I got to the economics, actually, that's probably a good time for a quick break, and then quick sales message, and then we'll come back and we'll talk about the economics and how it sort of fits together in terms of what we're seeing at the moment.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
Right, so I'm going to approach the economics from a couple of different angles. Probably the simplest way is just to look and say, if you look at Uber as an example, they claim its drivers get about 70% of the ride fare. Drivers have a different view. Drivers think they get about 50%, but anyway, there's you're in somewhere in that range. Let's call it 60%, just to split the difference on that. So I guess it's a big picture, and then Uber takes a chunk then of I think it's about 16% or something like that of the gross bookings, and so there is an argument to go, well, if all you're doing is replacing Uber drivers, and so you're basically saying, okay, well, now you can cut your costs of your car by 60%. Now there is extra technology that's going to go into that, and some extra things like that. So we'll need to lift that a little bit. But there's a big picture sense is you could probably halve the going rate of what cars are costing, what Uber's costing, and have a very profitable company in terms of that sense. So that's one part of it. The other part then is that if you look at sort of the Waymo car cost, it seems to have come down quite significantly over the last couple of years. So some of these original models, it's $300-400, maybe $1 million for some of the earliest ones. There was certainly some pretty significant costs to talking about in terms of the cost for them. The current sort of Waymo cars are largely Jags. And so they seem to be more expensive. Like the actual car itself is sort of 70 odd grand US. And so then you add things in, it's probably 150 to 200 all up US dollars that the cost of these cars at the moment. That's the models that they were running, 3-4 years ago really is well, even longer than that, they've been running those cars. So they've just rolled off this new set of cars that they're running out. It's a Zeekr from Geely, Chinese brand. So these are now guesses because we're sort of guessing at what these are costing. So it seems to be costing roughly about 40 grand. Was that the price of that sort of equivalent car without any of the tech? So let's call it 40 grand, and this is all US dollars. So 40 grand US. The sensors then look. They might be as low as 3,000 now. Originally, this was hundreds of thousands and around that. And that was part of the reason why why Tesla sort of went down this path of not having the same sensors because the sensors were so expensive. But the thought now is the sensors could be as low as sort of 3,000. They're probably around 10. Somewhere in that range is what we think the sensors are costing within these. The computers within the car. $5 grand probably at least. Could be 15. I doubt it's as high as 15, but somewhere in that 5 to 15 range is pretty reasonable for the compute cost. There's some sort of integration cost. Again, hard to tell. Could be 2 or 3 grand. It could be 20 grand. Bit of a punt. Let's call it 10. So all up, that sort of gives you somewhere in that $50,000 to $100,000 range in terms of these cars. So so expensive in terms of a car, but relative to the cost of if you've got an Uber driver driving you around in an Audi or a BMW or something like that, then probably the cost might not be that dissimilar to what they've paid for the car. So I think there's and there's certainly a pretty reasonable argument going forward is that these costs will come down. They've come down significantly already. They're probably halved just in the last couple of years. And the more cars of these you build, the cheaper they're going to get, particularly some of those things like integration costs and things like that. The other thing is that there's obviously unit cost savings you can get across some of things like the computing and stuff like that that run. But your overall cost is probably not dissimilar to going forward. It's probably not wildly different to the cost of a normal an alternative car that you might buy. Then part of that comes because they don't care about you don't care about the brand. So if I'm buying a car for myself and I want to impress my neighbors and friends and potential potential mates, how successful I am, then I might be prepared to spend extra money. If I'm just getting a taxi somewhere, do I really care about what brand it turns up? Or am I just happy to get in whatever and drive within that? So that's sort of where I think you look at some of the cost savings. So what does it mean for? Oh, sorry. And then so then if we want to talk sort of rough economics on this, my sort of rule of thumb, or just a sort of broad one is if you want to compare, say, a car hire company is a pretty good example. And so you can rent a car for $60 a day, and car companies are happy with that. They run at about a 75% utilization rate. So that means that they're making about $45 a day on that car, which is, let's call that the capital cost of a car is $45 a day. So then you sort of go, well, let's add a third to that to add in technology costs and all the other bits that go with it, the oversight and things like that. And so you're like, okay, now we're back to sort of $60 a day. So you need to get cover for the other things we've added onto this car. Now you're looking at a driverless car, so it can operate theoretically, close to 24 hours a day, but that's probably not likely. So let's call it 15. Just take into account you got to charge the battery. There's cleaning. You'll have slow periods over the middle of the night. Sometimes you'll need servicing. All this type of stuff like that. So let's say you're running 15 hours. So if you need to make $60 a day and you need to run for 15 hours, you need to make $4 an hour as a car company, as a car owner, to be happy with to get the same type of return that we're seeing for car rental companies at the moment. So you assume 1.5 trips an hour, which is sort of roughly the average. You add in some electricity costs and a bit to the booking company and all that type of stuff like that, and you're talking $2.50, $3 per trip as an end cost to a user. So really, I guess what we're talking about is public transport type prices for driverless car rides, and I think that's where the real economics come from it, and maybe it's a subscription service. Maybe for whatever X $1,000 per year, I get so many rides or whatever it is that there's lots of other different things that could emerge in terms of how these things get priced. But I guess the net effect of it is, take out the cost of a driver, and all of a sudden, these costs can get really low for city driving. Lots of arguments like, oh yeah, but what if I want to drive long distances, and what if I, want to go on holidays, and there's all these other factors. You go, yeah, sure. You might not be using it for those, but as a big picture sense, for most of the travel that people do from day to day, week to week. And especially taking into account, if it's the part where you're like, yeah, I need to take the kids to soccer on the weekend, and it's like, well, I've pre-ordered my car to come and pick me up at 7:30 and drop us off down at the soccer field, and then I pre-ordered another one to come and pick us up an hour and a half later after the game, and it may end up being much easier, and on parking and all these other factors there's you can easily see some cases where the economics just really do work out for people in terms of that. And so what does that mean for for some of the, as an investment perspective, where do you see the biggest impacts for this? So I'll just go to one more quick message, and then we'll jump into some of those investment impacts and what we think, and hit some of these questions.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show.
Right. So, so the other, before I jump into some of these ones, it's worth talking as well. There are other some of the other negatives as well, that sort of that I probably should touch on. Complaints for people about that. In San Francisco, there was a bit where people were placing driver cones on top of cars and saying, okay, look, we can confuse these cars by putting the driver cones, and then they get stuck and they block traffic and all this type of stuff like that. And there's stuff talking about saying, oh, look, if you drop cardboard cutouts in front of these things, they might not be able to recognize that it's actually just a cardboard cutout, and you can pause traffic. And people lighting in the Los Angeles, when there was some of the riots they had recently there, or some of the demonstrations more, they were lighting some of these driverless cars on fire. Look, all problems, but in a way, we rely on the fact that it's not just driverless cars you can light on fire. You can light a lot of stuff on fire. You can light shops on fire. You can light normal parked cars on fire. Is there something special about driverless cars being lit on fire? I don't know. I don't know if there's a special danger there. It doesn't seem to be particularly different. It's one of the issues with cardboard cutouts. Dropping these on the road in front of them and saying, oh yeah, this will, they won't be able to recognize all that type of stuff. Well, look, there's a lot of human drivers as well. If you start dropping cardboard cutouts of people onto the road, may not recognize immediately that it's carbon cutout. It's sort of that. I think XKCD has sort of got a few things on this to sort of saying it's one of the benefits of the human race is that most people aren't psychopaths. That's not what we're. There's a lot of things you can do to initial. You can a lot of ways you can stuff up driverless cars that just work just as fine on non-driverless cars, and we rely on the fact that people just don't do that type of stuff. Or if they do this, police are out there trying to catch them, and chances are with video cameras and all these other things that these cars have, that it might actually be easier to catch some of the people if they are doing this type of stuff. There's but let's talk the implications. So before I get to that, let's talk about the time frame in terms of these. So we're at the stage now where it does seem to be potential for exponential growth. So we've talked about this time coming down, 5 years for the first one and 2 years for the next one and next city. And then, we're getting back to sort of under 1 year now. And certainly the time frame for that testing, the beta testing, is back to a month now. It seems as if they're pretty happy once they've sent it through their version of checks that they need to do within a particular city, that they can pretty much launch once you've sent a few test customers through for a couple of weeks. Is like, now great, we're ready to roll it out to everyone. So I think that time to roll out seems to be decreasing quite dramatically. Could you get to the stage where you're starting, and also as well, it seemed to be happier running it in multiple cities as well. So it used to be one city at a time, and then 2 cities, and now they're looking at 3 different cities. They're sort of starting to set up the setup process with, then they got to 3, and now they're looking at a whole bunch of cities. They're doing preliminary work. Could you see that? Quite quickly you've reached just a massive proportion of the US driving market? Absolutely. It might take forever to roll out into country towns and other places like that, but realistically, that's not where the ride shares are happening right now anyway. And so, so the ride share market is the first one. Then you look at the actual, can that start increasing the size of the ride share market? Now, at the moment, Tesla's put out some pretty aggressive pricing, but it's pretty hard to tell with what's going on with Tesla, because they're really not at the stage where they're in any danger of expanding quite rapidly. In my view, having said that, once they do perfect their Tesla's benefit is once they've got their software right in terms of that driving, then the expansion they've got all the cars are ready to go. Like they've got a whole bunch of ones which they can just turn to most of their existing users and say, okay, do you want to rent your car out? You already own it. Do you want to rent this out as a driverless car? And who knows what proportion takes it up, but Tesla quite possibly have a running advantage in that perspective. What they don't have a running advantage in is not only are they still very much at this early stages, they don't have a lot of the technology, the radar technology and everything like that. Tesla basically took a bet that cameras can do most of it. And I sort of feel like when you went back 10 years ago, when they made that bet, or maybe 7 or 8 years ago when they made that bet, you probably saw about, 60% of people, maybe 70% of people were like, no, you need all these other radars and lidars and all these other things with it. And a third of the experts were like, maybe you can get away with just cameras, and maybe not having as many inputs coming in actually gives a clearer signals to, you don't have competing things where the lidar might be saying one thing and this is, there's confusion in the system if you get too many inputs. It seems to me that the experts have very much moved in the other way though. So where you might have been 60, 70% saying you need all these lidar, and 30 or 40% saying you didn't, which is what Tesla's doing. Now I think it's probably 10 or 20% or less that are still on board with, no, you can get away without these other systems. So Tesla does have sort of that issue sort of lurking over it behind it. Maybe they get it right, and maybe they come racing through the pack and beat Google and everyone else. But it seems unlikely at the moment, to me at least. Okay, sorry, that was just a quick aside on Tesla. What do we mean for for investment? I think Tesla's a tough one for that. Waymo, yes, it's got some benefits there, but I do think I think it's more for me about, it's easier to pick the losers out of this and the sectors that are going to be more affected, because maybe Amazon comes up with something great and it sweeps in and takes the market or whatever it is. I do think there's a reasonable chance that we get a sort of land rush, so similar to the internet, similar to some of the AI stuff, where effectively what happens is, or similar to all the delivery companies we saw, like the Uber Eats and those ones, DoorDash, where effectively companies raised all this cheap capital because it was seen as this great market, and so they pushed the prices down quite dramatically in the early years just to get everyone on board, and so you either look at this as saying these companies are going to they're basically going to say, oh, we're going to take over from ride shares and taxis, and we're going to replace the driver, and the company's going to make all the profits. They're going to run the same cost as what you get to a taxi, or we'll cut it by 10, 20% or whatever, but we're just going to pick up all that extra money that you would have paid to the driver is going to go to the companies who produce technology. That's one sort of model of it, you sort of profit maximization. Your other one is there'll be 3 or 4 companies in the space, and they all want to become the biggest and become the app that everyone has on their phone. And it's a bit of a land rush where investors are basically funding to say, no, we want to drive the cost down as low as we possibly can. And then once you've established, monopoly or dominant market position, now you can start ratcheting up the costs. But the initial part of the few years will be all about getting things as cheap as possible. Now, I think that's more likely that's where you end up. So you can make some bets on technology at the moment. If you want to make a bet on Tesla, go for it. To me, it seems Waymo is just so far in front that it's their race to lose at the moment. But there's a winner's part now. Then there's a loser's part about who's going to lose in this. So one factor is production of cars is a big one. So if you do get to the stage where, let's start with the more basic version first, which is the rideshare market seems to be the first one to get hit. Now, maybe Uber ends up becoming the rideshare partner of choice. They have partnered with Google in some cities. So Google's doing some direct in some cities, and they're doing other ones where they're partnering with Uber. Maybe Uber picks it all up, and some of these rideshare companies just, that's where you end up, is that they're the ones that get it, and the losers are effectively just the everyone who is drive sharing at the moment, who is all the actual drivers at the moment. Beyond that, though, what you start getting into beyond that is once you start eating into the rest of the market, if you can expand beyond that ride share into people saying, well, you know what, I don't need a second car now. I'll just have one car for when I want to do whatever drives, and the day-to-day stuff, back and forth to the shops and all that, we'll just use the driverless cars. Is you're talking about one driverless taxi replacing sort of 5 to 10 cars, because people just don't use their cars very much. And if we're talking about replacing second cars, or third cars or whatever, they use them even less. And so there's this part where you'll have one car doing 50, 60,000 kilometers a year, rather than a bunch of cars doing 6,000 or 8,000 kilometers a year. And so if you're replacing 10 cars, that's a huge hit to the car industry. So 100 million cars a year, if that turns into 10 million cars a year, and if it turns into people just stop caring about the brand as much, then car companies start suffering on margins, because now they're dealing with sort of Googles or Waymos or bigger companies that they're actually just saying, well, I'm going to come and buy 50, 100,000 cars from you for my expansion things. And so I want a big discount. I'm not going to pay you retail price for it. So, whether I buy it from you or whether I buy it from your competitor next door, doesn't really bother me if I'm getting the same type of car to the same spec. So there's the actual car companies within that seem very much at risk in terms of that. In terms of those, the running costs. Now, this is sort of an interesting one in that the running costs for electric vehicles are very low, but the repair costs are very high. And so what you've seen in some of the car rental companies is they've sort of rolled out these electric vehicle fleets, and now they've sort of started to second guess that, and they're sort of reducing the amount of electric vehicles they've got. Because what tends to happen with these with the car rental companies is they self-insure, because they're sort of like, oh, we've got a lot of these cars out there, and so yeah, we'll just charge for the accidents or whatever, but we can sort of self-insure it because the costs aren't going to be, because they've got enough cars that they get the variability themselves. But so if you've got the problem that when cars get in accidents, they're actually, so you've got the running costs, you might be $2,000 or $3,000 cheaper per year per car. So significantly cheaper in terms of the running costs and repair costs, running costs and servicing costs of electric vehicles. But then every time you get in an accident, it does way more damage, because then it might damage the battery, and all of a sudden you're replacing the half the car for what might have been something pretty minor in another car. So that's sort of been the downside from the electric vehicle for fleets or bigger fleets. Is that if the argument though is that driverless cars actually just crash way less than others, and actually the more driverless cars you get on the road, then there's actually a bit of a domino effect in terms of, if you've got 10 cars out there and they're all human drivers, and one makes a small mistake, which the next one has to swerve a bit, and the next one swerves, and the final one person swerves into another car, but you've inserted a driverless car in that chain somewhere, is you might even not even get the accident, because the first car swerves, the second car starts to swerve, but the third one's already seen the actions, because it's paying more attention, it's got more sensors, and it can avoid without sort of creating that domino effect on. Is that there's potential that you start adding more and more cars, the incident of accidents may well drop significantly more. And so but the net effect of that is there's a big market, the whole aftermarket parts and the repair of cars and all that type of paddle beating and things like that. You might be talking half that revenue to the entire sector just goes. Maybe there's an uplift in cleaning, car cleaning and things like that. But again, I guess I doubt I sort of feel like there'll be a little bit about, it'll be more commercial. It'll be like, okay, we've got a whole fleet of these taxis. They'll roll in once or twice a day, or whenever they detect that they're dirty and whatever, or something's happened, somebody's thrown up in one or dropped a drink in one, or whatever it is. They'll turn up to the cleaning centers and get cleaned by your crew. But you're going to get less in the whole market of, I've turned up to a car wash cafe and I want to spend $100 getting my car washed and cleaned and deodorized and whatever it is. It's all it's less where people are spending big dollars on that. So that's that whole car sector, servicing of cars is a huge market, which you could easily see quite significant changes to. Land cost is another big one, and this is one of the reasons we've got this on one of our sort of major themes to this, is that you've got the land cost thought behind, first of all, the parking side. If you get rid of one driverless taxi is replacing 5 or 10 cars, well, that's 5 or 10 parking spaces that are no longer needed. So does this mean that you're looking at, first of all, more spaces in houses? So houses that have 2-car garages might only need a 1-car garage or no garage at all, and so now you've got effectively an extra room per house, and so there's sort of some land cost issues within that. There's land cost within parking within cities and things like that. Can you have more cafes and get rid of more parking? Turn more parking garages into actual buildings. Buildings that have got car parks in them, above ground car parks. Whether they can start converting those back into apartments or other things. Commercial property that they might be converting car parks back into something else. Like, there's a whole land cost issues with that, and that's even before you get to the part where you might see that people are actually prepared to live further. If it's a choice about saying, well, if I live in a rural town and I have to drive 15 minutes to the train, and then I jump on the train and it's 45 minutes into the city, that's not a lot of fun and it's depressing, and I have to get the train at the right time and all these factors like that. But maybe if I'm just jumping into a driverless car and I can live in the place I want to live, and I don't need to worry as much about getting connecting routes and all these things like that. I can just sit in my car and read or watch my videos or do whatever it is you want to do, and I'm on my own, or I'm with my family, and I feel as if it's more quality time. I'm not sitting in the traffic myself. I'm actually getting to do stuff. Maybe people will be willing to live further away, and so maybe you end up with a whole massive change in terms of the land cost, and people just prepared to live further and further away. So and maybe again that affects even things like regional flights or things like that, where people might, if it's a choice between saying, do I get on a plane to fly 45 minutes to some regional town, or am I willing to sit in a driverless car for 3 or 4 hours instead? Maybe there's that equation might end up changing. If there's a thought, well, yeah, I'll sit in the driverless car and I'll watch all these movies I wanted to watch, and I'll listen to my music, and I'll do whatever, and with the whole hassle of going to an airport and all these other factors, it might end up taking away from demand for these other factors. For remaining cars, there's this whole idea of car size. There's this, I guess, war that's maybe not war is, but arms race that's going on in terms of larger and larger cars, and people's preference for the safety mechanism, safety ideas around, well, if I'm driving an SUV and I've got my kids and my family and that, and we do get in an accident, then I'm much more likely to not get hurt. And so there's this whole cars getting bigger and bigger over time. Maybe that completely reverses, and you get if all of a sudden the rate of accidents drops quite dramatically, well, the cars people are demanding might roll back, and so you're looking at not only changes in terms of more electric cars, but maybe the fuel efficiency and things like that become a much bigger deal, and cars themselves get smaller, and it's a whole factor about, well, maybe if driverless, if we're looking at driverless taxis, and most often you've only got 2 or 3 occupants, there might be a standard, quite small, much cheaper car that comes out, and then there's larger ones that roll out that have trays. If you're going to Bunnings and you need to bring stuff home, you've got one of those ones, and if you're moving house, you're getting a bigger one, and I guess there's a whole bunch of different other factors that could flow into the types of cars that people are wanting, and the demand for a lot of rental type services that might end up going away. And then that's before you get to insurance costs. So so the insurance, and so the question around insurance companies initially is probably relatively positive in terms of they're factoring in a certain amount of accidents, and if that starts to drop away quite dramatically. The question will be, though, whether a lot of these car companies will just self-insure and say, well, that's fine, we'll take the risk. We'll run the risk that if we've got 10,000 cars, then only a certain number of them will be in accidents and all that type of stuff, and we could just, rather than paying an insurance premium and then paying X percent, and let's say you think there's going to be 1 or 2% of your cars crash every year, and you need to spend that much money, is rather than saying I'll pay out 2% in premiums and then get it back when we have those crashes, is maybe just you take that as an insurance cost across your fleet, and so you don't even pay an insurer at all. So the insurance market, some fallout there as well. So net effect, really important space. I don't think the Uber stuff, I don't think the Tesla announcements changed my view much, but I do think the announcements we've seen in Google are making a big deal, and really need to be watched, because some of these trends and the stuff I'm talking about, these can be groundbreaking changes. And that's, if it does get to the stage we're talking about, we're also talking about this extra, 4 or 5 grand that of disposable income that people are going to have. So if you've got people, say, with a 2-car family on average at the moment, spending 15 to 20 grand a year on having 2 cars, and when I say spending 15 to 20 grand, 5 or 6 of that's depreciation, and then the rest of that's all your operating costs. If you can give that that 2-car family goes to a 1-car plus using driverless cars and saves themselves $5,000 a year, what are they going to do with that money? Where's that going to go? If you get to the stage where people are getting rid of their cars completely, there's probably a big behavioural issue in terms of that, saying, if I can't signal to all my neighbours and my friends that I'm an important person because I drive XYZ brand of car, there's probably something else that you need to, virtual signaling. I need to, maybe it's watches, or maybe it's clothes, or I don't know, whatever. There's some sort of I'm not quite sure what the next that next phase is, but there's a certain amount of wealth signaling that goes on through cars, and that's probably going to need a replacement. I'm not quite sure where it is, and it'd be interesting for people to hit up in the comments as to what your thoughts are on where that extra money is going to get spent in terms of where are we going to see virtual signaling. So what are the types of industries that we should be thinking about buying in that case? Regardless, certainly, as I said, it's a sector well worth watching, and I think I wouldn't be as focused on what Google is doing. Sorry, on what Tesla is doing. I'd be much more focused on what Waymo and Google are doing in this space until we see gets more information about what's happening there. So thanks for listening in. Just a reminder that we are on. You can go to nucleuswealth.com/content to get all our research. You can hear us on a whole bunch of different podcast platforms, a whole bunch of different social media. If you liked what you hear, hit the like and subscribe buttons, and we will see everyone next week. Thanks.